I'm John Hanna for CityTV.net, and we have Bob Stein, Senior Economist at First Trust Advisors. Thanks for joining us, sir.
Thank you, John.
All right, so, sir, there's some issues right now. The stock market is down triple digit at this time at 1:29 in the afternoon Eastern time. So the job numbers came out, and what are your thoughts about it?
Well, I don't think it's nearly as bad as the investor consensus is taking it. I like to look at private sector payrolls. Everybody knows that the government sector is contracting, and it continued to contract in April with a loss of 15,000 jobs. But I'm focused on the private sector, and including the revisions for the prior 2 months, which have been consistently up over the past year, and which were up again this past month. Private sector payrolls expanded by 196,000, which is consistent with what we see for the rest of the year, of about 175 to 200,000 jobs per month. Now, some months will be higher, some months will be lower. Other parts of the report were also not that bad. I mean, the unemployment rate went down. Everybody knows it's because the labor force declined. But when you really take a look at it, I mean, clearly the labor force contraction was why the unemployment rate went down last month. But over the past year, the unemployment rate's down almost a full percentage point, and the labor force is up 700,000. So the declining trend in the unemployment rate is not due to labor force contraction. And then wages were flat, and that's a little worrisome, but the trend has been up about 2%, about 1.8% over the past year. And so there are bound to be months where it's 0 and months where it's 0.2 or 0.3, sometimes even higher. And so I don't think this report was really out of whack or symptomatic of a weakening economy. I think it's symptomatic of the economy we've had over the past couple of years, which is growing, although not nearly as quickly as it should be.
Okay, so is this kind of like the new norm that we're going to have to adjust ourselves? That with this kind of it's not stopped, but it's getting some jobs out there, but it's not going to be as high as what the estimates are. So is this going to be the new normal now for the next several months or a year or two?
Well, I wouldn't say new normal, because that suggests that we're likely to be here for a very long period of time, at least a few years. I do think we'll be here for about another year in terms of job creation. Again, we're thinking 175 to 200,000 on average over the next year. One thing to watch for is what happens in the housing sector. The housing sector has hit an inflection point. It's gradually starting to improve. The housing sector is very labor-intensive rather than capital-intensive. So we think that's going to lead to an upsurge in job growth later this year.
Okay, so it sounds like you're optimistic about the economy here.
Yeah, relative to the consensus, we are optimistic, and we think the equity market is selling off in excess of what it should be based on today's numbers.
Okay, so pretty much is this like some people just getting jittery about what's, kind of pull the trigger now as opposed to like waiting for it to what's going to see within the next couple of, summer months?
Exactly. I think later this summer people will regret having sold off on today's report.
Oh, okay, so you're going to be in that camp where, you're not going to be selling in May and just stick with it and, see what happens from here on?
No, I would hold positions in equities right now.
Okay, so just hold on to positions for yourself and for your clients and all that stuff. Now, where do you see the GDP, the U.S. GDP for the end of the year?
For the end of the year, well, I think there's going to be a big difference between the first half, where we're running about 2%, pretty tepid economic growth, and about 4% in the second half. So I do think it'll pick up significantly. And by the end of the year, the economy will have grown about 3% compared to late 2011. So we're a little bit above consensus still on economic growth.
Okay. And now what about the people saying that, some talks out there that compared with the outside economies, the U.S. is a little bit more stable as opposed to the other economies out there? Are you in the same camp?
Yes, I am. I mean, we are definitely more stable than Europe right now, although I don't think Europe is going to collapse anytime soon. And so, although I'm not an expert in equity markets over there by any stretch, I do think it might be a good opportunity to buy in Europe in certain countries.
So kind of like slowly getting into those areas a little bit at a time.
Yes.
Okay. Overall, so you seem to be, like I said, optimistic about the economy from 2% right now, the first half, to about 4% in the second half of this year. So, what pretty much stick with the investments here in the U.S. and a little bit of investments outside. Any other things that you tell your clients or within your company at First Trust?
Yeah, I mean, besides liking equities, I like real estate. I think real estate will continue to do well in the next few years.
And why is that? Is that because of the it's kind of like plateauing right now? Are we at the bottom of the real estate now, or is it like more construction happening?
I think we're at the bottom for prices. I mean, construction has already come off the bottom, continue to go up. But for prices, we're at bottom. I mean, you have a lot of markets around the country that are severely below fair value, and the reason they have to be is because they still have to clear out in excess inventory. But when that excess is cleared several years from now, prices will be substantially higher than they are today, both on the commercial side, but even more so on the residential side.
Okay, consumer confidence now. It's part of the GDP. It's a big part of consumer spending here in the U.S. So, what are your thoughts on consumer confidence now?
Well, you know what, frankly, John, I really don't follow consumer confidence numbers. I think you can tell more about what the consumer is doing by looking at other economic indicators than the consumer confidence numbers themselves. People come out of restaurants fat and happy, and if they're polled, they say, "Oh, the economy stinks," but they're fat and happy. So, I just don't buy those numbers.
Okay. Now, in the morning, right now, for the past 6 months now, what do you do when you come into your office? What is the first thing that you check on with regards to the economic data out there?
You know what? The first thing I personally do is check the futures markets, just what happened overnight in Europe, and what is happening in the bond market and commodity markets.
Okay. Thanks again, Bob, Senior Economist at First Trust Advisors, and I'm John Hanna for CDTV.net in New York City.